Now we're going to do a demonstration problem for Angel's Delivery Service. We're going to record the transactions for this company for the month of May. So we're going to need a few things. We're going to need a list of the company's transactions for May, and technically you don't have to print this one out if you don't want to, because each slide will bring in each transaction one at a time. But usually students like to see all the transactions at one time. You will also need the expanded accounting equation, which we usually call my famous accounting grid. And I don't have a printout for this because you should have this written in your notes already. And if you don't, you should get it written in your notes. You're going to eventually need to know this by heart from memory. But for now, you don't need to have this memorized since we're learning to use it for the very first time. So on the upcoming videos, I will bring in this image and we will use this accounting grid to figure out if an account is going to be debited or if an account is going to be credited. You should print out this chart of accounts for Angel's Delivery Service. Why do we need this chart of accounts? Well, let's say the company buys a truck. What are you going to call that truck account? Are you going to call it truck or trucks? No. This company has chosen to call it delivery trucks. If this company buys some equipment, are you going to use an account called equipment? Nope, there is no such thing. This company chooses to call it office equipment. If the company buys some fuel for their delivery trucks, what kind of expense are going to use? Fuel expense? Nope, they call it gas expense. And if they get a telephone bill, what kind of expense is that? Utility expense? Nope, this company chooses to call it telephone expense. And finally, when this company delivers something and they earn revenue, what is their revenue account called? Well, this company calls it delivery fees earned. Usually revenue accounts are going to have the word revenue in the account title, but this is an exception. So when we sell something, and when I say sell something, that means you sold a service for delivering something, we're going to record delivery fees earned. And where are we going to record these May transactions? Where are transactions always recorded first? They're always recorded in the journal. So you're going to need to print out this journal, and you're going to be filling out the journal by hand. And this journal, by the way, is on Canvas. So all these handouts that you need are on Canvas. And then once we record a transaction in the journal, we need to figure out the account's balances after the transaction. And where do we track the account balances? In the ledger. Now this ledger is in the form of T accounts, which is easier for learning rather than the 4-column ledger. Notice each T account at the top has the account name, like cash, and the account number, like 111. For now, the account number is not so important. Later, when we learn how to post things to the ledger, that's when we will be using the account numbers. So let's get started. So you should have printed out this ledger in the form of T accounts. And we want to enter debits and credits for each account. Write small because you're going to have to save some space. And remember, you can abbreviate them as debits should be abbreviated as DR and credits should be abbreviated as CR. So it'll save you some space. So let's start with cash. Which side is the debit? Well, remember, for all accounts, the debit is on the left side. So I'm going to put a DR, or you can write debit if you write small, on the left side of cash, which means the right side is the credit. How about accounts receivable? Or let's do accounts payable instead. Where's the debit? Well, debits are always on the left. Credits are always on the right. Same with advertising expense. So go ahead and fill out all of these debits and credits. Remember, write small. And always remember, debits are on the left. Kind of like Washington, D.C. The D comes before the C. So I'm doing office equipment, Angel withdrawals, salaries expense, delivery trucks. Now remember the revenue account is called delivery fees earned. So if you want next to delivery fees earned, you can write revenue in parentheses to remind you that that is the revenue account. You can always look at the chart of accounts to figure out what type of accounts these are. All right, now starting with assets, we want to enter the increase, which is the normal balance side, for each account. The increase side is just the plus side, and then we want to write the decrease side for each account. So let's consult our accounting grid, and starting with cash, first of all, cash is what type of account? Cash is an asset. So which side is the plus side for cash? It's the debit side. Now I'm a visual person, so instead of saying debit, sometimes I'll say left side. And then that means that the minus side is the opposite side, the credit side. Now let's figure out the plus and minus side for accounts receivable. What type of account is accounts receivable? It's an asset. So which side do assets increase on? The left side, the debit side. So I'm going to put a plus on the debit side, which means the credit must be the minus sign. Next, let's do office equipment. What type of account is office equipment? It's an asset. Assets have the plus on which side? Are you starting to get the hang of this now? The plus goes on the debit side, which means the minus is on the right side. How about delivery trucks? What type of account is delivery trucks? That's an asset. Therefore, the plus is on the left side and the minus is on the right side. Next, let's do accounts payable. What type of account is accounts payable? It's a liability. And which side do liabilities increase on? This time they increase on the credit side. So I'm going to put a plus on the credit side, which means the minus goes on the debit side. How about capital? What type of account is capital? It's owner's equity, also known as the capital account, and it increases on which side? The credit side. So I'm going to put a minus on the debit side. How about withdrawals? Withdrawals increase on the debit side. Therefore, they decrease on the credit side. How about delivery fees earned? What type of account is delivery fees earned? Now, if you forgot, because this one's a little bit tricky, if you forgot, consult your chart of accounts. According to the chart of accounts, what type of account is delivery fees earned? It's a revenue. Now we can consult our accounting grid, and which side is a plus side for revenues? It's on the credit side. So I'm going to put a minus on the debit side. And then the last four accounts are all expenses. What side do expenses increase on? The debit side. So I'm going to put a minus on the credit side. And then for all the other expenses, I'm going to put a plus on the left side and a minus on the right side. So go ahead and put your pluses and minuses. So let's talk about the normal balance side really quickly again. So normal balance, remember, just means the plus side of an account. Think about your cash account. Remember, cash account is the same as your checking account. So does your checking account normally have a positive balance or a negative balance? It should normally have a positive balance. Now, it's possible you could balance a check and temporarily have a negative balance, but that's not the normal balance. Let's say we have a transaction where we buy office equipment for cash. We need to figure out how to record this in the journal. So if we follow this 5-step process in order, it will make transaction analysis much easier. So the first step is to determine which accounts are affected. And for this one, it's pretty easy. Office equipment and cash. The second step is to determine which category the accounts belong to. In other words, are these accounts assets, liabilities, equity, revenue, expense, draw? Well, in this case, they're both assets. And then we would determine which accounts increase or decrease. Let's start with office equipment. Do we have more office equipment or less office equipment after this transaction? Obviously, we have more. So office equipment is increasing. And what's happening to cash? Well, we paid cash, so cash is decreasing. Step 4, what do the rules of debits and credits say? So we would look at our accounting grid, and we find out that if office equipment is increasing, we need to debit that account. And if cash is decreasing, we need to credit cash. And then the 5th step is just to record the transaction in the journal. So when we're entering transactions in the journal, we're going to be using T accounts a lot of times to help us figure out the journal transaction. Now remember, T accounts are unpublished tools, they're unofficial, and they're used by accountants to help prepare transactions for the journal. To officially record each transaction, we record it in the journal first. Sometimes the journal will be called the general journal. So there's 4 parts to a journal entry, and we'll see that on the next slide. But the first part is the date of the transaction, and then remember we have to list the debit account first along with the dollar amount. Then we list the credit account along with the dollar amount, and then we usually have a brief explanation of the transaction. So what does this all look like? Well, here we go. So every journal transaction must have a transaction date. Now you could write July 1st, or you could write July 1st, 2024, the whole date. At this point, we just want to make sure you have at least the month and the day. Next, we're going to list the debit account. In this case, it's cash. And then you list the debit amount, in this case, $75,000. And then you list the credit account, Josie Smith Capital, and the credit dollar amount, $75,000. Now this next column, posting reference, also called post ref, this we will learn to use later. So for now, we're just going to ignore this column. And always make sure you have a debit and a credit and that they balance, that they match. And then we have some sort of a explanation of the transaction. Now in this case, the owner's making an investment, so she probably put a check into her account, into her checking account. So in the explanation in the real world, you'd probably have the check number. So let's analyze our first transaction. On May 2nd, Alice, the owner of the company, invested $40,000 in the business checking account. So let's look at our chart of accounts and figure out what are the 2 accounts that are affected. So what do you think? She invested $40,000 in the business checking account. Now remember, the business checking account is called the cash account. So obviously the cash account is being affected. So for the cash account, let's figure out step 2. What category does the cash account belong to? In other words, is it asset, liability, revenue, etc.? Well, obviously that's an asset. So step 3, and this is the step that a lot of students tend to skip, and I'm not sure why. This is a critical step. We need to figure out, is cash going up or for the business, or is it going down? Well, for the business, the cash is going up. And then we consult our accounting grid, the expanded accounting equation. We check to see, is cash increasing as a debit or a credit? Well, it increases as a debit. Now let's figure out what the other account is. Notice the transaction says Alice invested $40,000 in the business checking account. So what is the other account that's always affected whenever the owner is investing some money? It's capital. So then we have to figure out, what category does the capital account belong to? Well, it belongs to owner's equity. And then is this account, is capital increasing or decreasing? Does the business have more capital or less capital? Well, obviously it has more. Next, we consult our accounting grid, and does capital increase on the left or the right side? It's the right side, also called the credit. So now that we've done that analysis, now we can create the journal transaction. So get out your journal paper. And remember, the date is the first thing we record. And the date was May 2nd. And we always list the debit account first. It's critical that you list the debit account first, because My Accounting Lab will mark you wrong if you do not put the debit first. So which account was being debited? It was cash. So we're going to list cash. And the debit amount was $40,000. Now remember, the journal, the debits and credits are always currency. So because they are always currency, we just leave the dollar sign out. And then we need the credit account. And for the credit account, we always indent it to make the transaction easier to read. And do you remember what the credit account was? It's Angel, comma, capital. And then we have to write in the the credit. So at this point, always double check. Do we have a debit and a credit, and do they match? Yep, $40,000 debit equals a $40,000 credit. So we're good. And then we put in some type of an explanation. Let's just call it owner investment. If you called it something else that's somewhat similar, that's fine. Now, a lot of students will ask here, well, do I have to indent the description? That's up to you. In here, we indented it some more, but it doesn't really matter. What is critical for indenting is always indent credit accounts. All right, so we recorded our very first journal transaction. Now, later on, your boss is going to ask you, and your boss is this Angel lady. She's going to ask you how much cash we have. And remember, the journal does not have account balances. Where do we find account balances? In the ledger. And in this project we're doing, the ledger is in the form of T accounts. So what we're going to do now is take the information from the journal transaction we just did, and we're going to post them, or just basically copy the numbers over to the correct account. So looking at your journal entry, we debited cash, so I'm going to put the letter A because that was transaction A. You can also put the date. The date kind of makes a little bit more sense. But for now, since we're learning, we're just going to put A for transaction A. We got $40,000 on the left side, the debit side, because that's what we did in the journal. And what was the account that we credited? It was the capital account. And put the letter A. The reason we put the letter A is in case we ever come back and look at the capital account and we're wondering, well, where did this $40,000 come from? We know it came from transaction A. Okay, and then this is really critical. Check. For this transaction, do debits equal credits? You might be saying, well, we already double checked that in the journal. But when you copy the numbers over, this is called posting. When you post those debits and credits to this ledger in the form of T accounts, it's easy to accidentally put the debit or credit on the wrong side. So do our debits equal our credits in this transaction? Yep, $40,000 debit and a $40,000 credit. So that's how we're going to analyze each of these transactions for the month of May for Angel's Delivery Service in the next few videos. And we're going to get a lot of practice at this. So it'll be difficult at first because it's so new, but once you practice it, as long as you have your accounting grid to consult, you're going to find out it's actually pretty easy because the different types of transactions start to repeat themselves.